today's webinar with Talius Group, everyone. I'm Gillian Fernandez, the Investor Relations Representative for Talius, and it's my pleasure to introduce Talius's Chairman, Ramsay Carter, and Managing Director and CEO, Pat Howard, who will provide an update on Talius's strategy, recent progress, and key announcements since our last webinar in March 2026. Founder and Executive Director Graham Russell will also be providing a demo of Talius One's Health module. Please feel free to ask a question at any time using the Q&A feature at the bottom of the screen, and we will address these toward the end of the webinar. I'll now hand over to Ramsay Carter, Chairman of Talius, to share some opening remarks. Over to you, Ramsay.
Thanks, Jill. Morning all, and thanks very much for your time. I'd like to thank those shareholders who attended the AGM last week. Per the announcements, you'll see it was a constructive meeting and we're buoyed by the support of our shareholders as all votes and requirements were met. Before I do hand to Pat, I would like to commend him on the impact that he's made since starting with us earlier this year. He and the executive have been completely focused on the performance and execution of Talius, ultimately returning positive returns to our shareholders. But with that, I'll hand over to Pat for him to explain further.
Thank you very much, Ramsay, and just want to also acknowledge Graham Russell as the founder will lead a Q&A at the end of this, and it couples on the back of a very successful demo that he ran at the AGM impromptu. So we'll continue to expose the product. We want you to understand that it is an existing product. It's not something that is in thought bubbles or a new process, and we want to be able to demonstrate the product working well. I'm not going to go through every slide. Many of them have been out in the market since February, but I will go through some of our newer slides in detail. If you take nothing else from the presentation, look, we want to emphasise that this is a sector in crisis. The amount of people turning 85 is extraordinary, and there is nowhere for them, a lot of them to go. We believe technology is the only answer to that solution, and Talius has a fantastic sensor-driven data set with fantastic insights, which Graham will represent really, really well. And I think Talius, as Ramsay led to, is that we have $3.3 million in recurring, $5 million cash in the bank, and we're a business that doesn't cash burn. We look after our cash in response. So if you take nothing more out of today, we hope you take those 3 points out as really strong messages. I would like to recognise, obviously, the chairman's message from the other day that is now on the ASX. If I start at the first point, we've had over the last 10 years, circa 15,000 people turning 85 or above each year for the last 10 years. And the system, the residential aged care sector, is already full. As of 2026, and as you can see by the slide, for the next 20 years, this number is going to triple. So for the next 10 years, the moving average is 45,000. So we want to understand that whilst we're in crisis now, the problem is only going to get worse. And understanding the thematic of the residential aged care sector is well known by many, but I think many people are waiting for a silver bullet that's not coming. And at the other end, there are not enough people to service them. We completely understand there's a structural shortage. It's a revolving door of staff. Burnout is at all-time highs. And there's obviously, to bring new staff in, there are significant concerns around immigration quotas and numbers around servicing this. So we're in a real quandary in the middle of this sector where we have a lot of people entering the sector and there are not enough people to service them. We believe technology is the only answer to that. If there's another answer, by all means, we'd be happy to hear it. But we are absolutely dedicated to the aged care sector. It's worth noting the regulatory forces that have come in to the sector as of the 1st of November last year. There are audits coming in. Responsible persons, i.e. both board directors, C-suite individuals, have now got changes and higher responsibilities. And as a consequence, we genuinely believe that they're going to need an ability to be able to have greater compliance and mitigate their risk, both for them and also the people that are being serviced in these aged care sectors in their homes. Granny May is an actual customer. This is a picture of the dashboard that's coming, and I'll leave Graham to do a far better job than me on showing you how that works. How Talius works is just a quick come through to the individual, some that you can be warned out, and from that position they get insights. It goes into emergency response, and you see it in the home, the census in a residential age. We'll give you a little bit of insight into dashboards in the middle. The one that we demonstrated today is the patient health one at the top, where you can see the red, oranges and the greens. And that is around helping staff and helping directors and boards and leaders, responsible people knowing where to go. We have real-time tracking on the top left. You have the alert status in terms of being able to talk to people, make issues, 5-minute, 10-minute, 20-minute warnings and escalations around that. And obviously device status. And I think this is some things I've learned coming into the sector. There are so many devices out there. You need visibility on what is working, what is not. Battery life, etc., is so important because for the individuals who need to be able to look for them. And we could have up to 500, 1,000 sensors within a site, and it's making sure you have visibility over those. We do believe that Talius can give you confidence under scrutiny. If the aged care sector comes and asks and you are audited, you have a really sensible reporting. We have over 60 reports in our system, one source of truth, but particularly around the regulatory and compliance requirements now, we are about reducing risk. That's for the patients, that's for the directors, and it's also for the staff. I won't dwell on this slide, but good to see some of our directors at the last AGM were re-elected, and we do believe there's a great opportunity to invest in Talius. This slide has been out there for a little while, so I won't dwell on it too strongly, but where our active subscriptions are up, annual recurring revenue was up. We are an operating cash flow positive business. We don't burn cash, and you're often asked about our cash burn. We are very responsible on cash, and we do believe there's an inflection point coming where we'll be able to take off in that regard. I won't link to the annual recurring revenue side, but to the average price of subscription at $64.50. Think about that as a per subscription or per device, a gateway device. I'm sure Graham will touch on that. And think about that as a device per room. We have an ability to be able to grow that and make that a significant larger over time by adding more sensors that you can pull data on at different times to get greater insights to the end user. This is a new slide, and it's really about trying to understand our customer base. The way we think about a hardware margin is around about 30%, but our software margin is above 70%. The more software sales we have as part of our mix, obviously higher end sustainability to the business profile. Our top 3 customers do represent 52%, and we value those customers very strongly, and obviously 5 and 10. This is not unusual to have a real concentration of your customer base, but we do have over 200 customers. So there's a very long tail, predominated by the home care market, but often they're very small customers versus some of our larger customers being large residential aged care. On the right-hand side is the Melody Park, Victoria deal that was announced several months ago. We're in the process of implementing that. Hardware and implementation is a one-off, but the recurring ARR of 40 grand a year on a 3-year deal. We have deals going out as far as 5 years, and I've asked about that 3-year to 5-year timeframe. Financial snapshot, software revenue being up compared to the previous year, ARR being up, active subscription up, and subscription percentage of revenue up. These are our metrics that we really value. Don't get me wrong, we understand that hardware is a part of doing business, but if we can do more deals where it's software only or minimal hardware, we obviously favour those. We have been asked about our listed peer comparison, and we've chosen a smaller competitor being Intellicare on is ICR, so our ASX code, and Ozco a larger competitor, just to give you a comparison. Takeaways are listed down the right-hand side, but if I lead your eyeballs to the EV versus ARR, we do believe we represent really good value at a 5 times multiple versus 140 times of Intellicare, and obviously on a revenue multiple, very attractive as well. I'll also take you down to the debt and operating cash flow, compare those. There are negative and positives. We believe we're in a really good position, inflection point, and obviously we have no debt. We also have a very broad footprint. We're across residential aged care, retirement living, home care, and emergency services, and we believe a broader impact and broader offering than some of our competitors. I'll continue into, the slide has been out there for a while, but home care, retirement living and aged care are our major focuses. We do have pilots running in the other 2 sectors. And as we talked about earlier, with the amount of people turning 85, we do believe that home care will become more like retirement living. Retirement living will become more like aged care because they won't be able to go. And we do know that aged cares are becoming more like hospitals. So our ability to service in different sectors is going to be incredibly important over that wave, tsunami wave, as Graham often calls it, of the aged care sector crisis that is coming. New contract wins. So John had another announcement, and that reseller partnership is expanding. Highgrove in Sydney is going really well. The New Direction Care in Brisbane site. All those have been really positive relationships, and we thank those clients and customers for supporting us in that process. We continue to be a business about scalable growth and sustainable cash flow. Very, very focused on both those two, simplifying our product offering over time so that they get a great opportunity to do that with more consistency. We've come into that position of being a startup type company where you're really reactive, and we've really got a sustainable offering that we believe is really attractive to the market. And secondly, that sustainable cash flow. We've had 2 Appendix 4Cs, but even prior to my time when Graham was leading and has done a wonderful job, 7 of those 14 Appendix 4Cs were positive as well. So there's some real underlying business fundamentals here which are really positive to the market. In terms of the investment summary, the one thing I'm going to focus on this page, and obviously it's up on the ASX now, is those government funding tailwinds. From the 1st of November, a lot more money came into the sector. As we've said earlier, we believe technology is the answer to a crisis of accommodation and a crisis of workforce. And we don't see any other answer. We want to help work with those suppliers, government and the end user, the patients, to be able to have a greater experience in their aged care life. So at that point, I think that is my last slide. It is. I'll stop sharing.
Thanks so much, Pat, for that presentation. I think we can move on to Q&A now, and we've got a few questions that have come through, so I'll do my best to navigate through those. The first one that's come through is the presentation shows 84% of annual recurring revenue is concentrated in the top 10 customers. That's a significant concentration for a platform that's supposed to be in land and expand mode. Can you tell us who your top 3 customers are by revenue contribution, what contracts they're on, and when those contracts are up for renewal? Ramsay, do you want to take that one?
A couple of points to that. Certainly as a board, we consider all risks, including concentration risk. And I think it's important to distinguish that not all clients or concentration are created equal. And what do I mean by that? So our 3 key counterparties are Keaton, ADT, and Hatto Hone St John in New Zealand, all of whom are on multi-year contracts. We've had a recent renewal, Keaton. It's a healthy mix of resellers and direct. And I think the reseller point is important, where we pride ourselves on being B2B and in some instances B2B2C. And we're seeing others now turn to that model as we look to be an enterprise solution. Reseller relationships are extremely important to us. It's a rising tide play. They grow, we grow, and we're very particular on who we resell through, and that amplifies our sales impact. With respect to the direct side, we're very focused and concentrating our efforts on enterprise engagements with key market leaders and high quality operators, as evidenced by us being across, which includes some home care, 204 sites. We do actually have quite a decent spread of installation and data collection, and we expect that to grow over time.
Thanks, Ramsay. And just to follow up to that as well, if those top 3 customers represent 52% of revenue, that's roughly $1.7 million sitting with 3 entities. If one of them chooses not to renew or renegotiate pricing, what's the mitigation plan there? Has any customer to date reduced their subscription count or exited?
I might take that one, Chair. Look, they haven't, and churn is very, very low. Look, I think there's a great mix. There's the benefit of having hardware and software. It's not an easy exit. I don't want to rely on that, obviously. We want to be able to make sure that we give a quality solution, and we do value our big 3 customers. We value all our customers. So our ability to have a hardware, software, and exiting is very, very difficult. And even in that long tail that Ramsay talked about, it's often back through resellers. So they'll take the hardware back and reutilize that in different places. So we don't get a lot of churn. In saying that, you've got to value your customers. You've got to continue to reiterate the quality use, our customer engagement, customer success. Staff member really tries to drive the utilization and making a really important part of the processes so that you do look after your customer base. And having our top 10 represent 84% means we really focus on those users to be able to make sure it's an incredibly integral piece of decision-making at board level, at staff level, and obviously for the patient as the end user.
I think too, Jill, just to quickly add, it's important to focus that there's, as Pat alluded, there's ongoing conversations to actually expand our product suite within the existing top 10 client base as well. So it's not a static conversation.
Thank you. Next question. Your average revenue per subscription is around $64.50 per year, which is about $5.40 per month. But the ARP deal works out to be roughly $185 per bed per year. What's driving that gap between the blended rate and what an enterprise deployment actually generates? Pat, do you want to take that one?
It's the nature of the larger deals, and part of the strategy at the moment is to drive those residential aged care large deals. That's not to say the smaller deals aren't happening, and we announced a non-material deal last week to the ASX, some expansion with one of our resellers, St John's. But look, Adventus, and it's been driven by Graham, who's on the call leading our sales arm, knows the product intimately. These are very big sites. They have lots and lots of devices that are required, and hence the size of the deals. So It is likely that the majority of our announcements will be residential aged care deals because of their size. But that's not to say that the home care market or some of the other markets or the pilots we put up in one of those slides towards the end isn't happening, that just the quantum of those deals aren't as large.
Thank you, Pat. Moving on, the ARP deal is $443,000 hardware upfront against $41,000 in revenue per year. As you deliberately shift towards subscriptions, at what point does hardware risk become a loss leader? And what happens to margins if hardware volume fall faster than subscription revenue builds?
We don't expect hardware to ever be a loss leader for us. I mean, as per the presentation, there's a 30% margin on that. As we've always stated through the years, we're actually device agnostic. So we resell the devices in the most part, save for a couple of additions that we might add to fill a gap. That's important. With the subscription revenue at 70% margin, give or take, clearly that's where the scalable growth can come from. And as was always the plan, the platform is now at a stage where, given its device agnostic nature, we can actually now come and sit on top of an existing hardware suite that other operators may have. And that's exactly what the MetLife Care announcement points to. So clearly, one, it's a high margin business for us. Two, the deployment is actually faster. And three, ultimately the platform becomes the focus of the conversation as we look to solve the problems for these operators.
Great. And just a follow-up question to this one. In Q1, revenue was $1.81 million annualized. That's roughly in line with financial year 2025. Is the hardware pipeline sufficient to sustain that level in Q2, or are you dependent on the ARP installation landing on time?
Dependency is probably too strong a word. We're certainly, very focused on the ARP execution. And as mentioned in the announcement, we've got 2 sites on foot now. There's more sites within their ecosystem, and we look forward to executing that well and delivering a great outcome. To ARP's credit, they're highly regarded in the market, and we see them as a bit of a increased test case for us. We do that right, the market will look as to what we're doing. So we're excited by that. And as Pat alluded, it's a rack, and it certainly has a number of devices. So that's exciting for us. I think where the board's getting more excited and or constructive is the pipeline that we do have. There's been an increased rigor placed upon how we look at the pipeline. And if anything, well, it's certainly probably more conservative than we've looked at it previously. And given Graham's efforts now that he's really focused on sales and client management, we're starting to see the fruits of that effort, and the pipeline's actually never been of higher quality, certainly with my time with the company. We're just looking forward to ensuring that the timing of that and the execution of that aligns with what we're looking to do.
Thank you. We've had a question come through. The peer comparison slide shows IntelliCare with approximately $99,000 in annualized SaaS revenue against Talius's $3.3 million annual recurring revenue. You frame that as 33 times more recurring revenue. In a competitive evaluation where a provider has looked at both platforms, what specifically causes them to choose Talius over IntelliCare?
Thanks for the subtle noticing, whoever asked that question. We haven't come up against IntelliCare in a tender at this point. But what I would say about it is the significance of the deal is a really big message to the sector. The size of the deals, and we see that residential aged care is going to have to do some very, very big deals. So we look at that very, very positively. Understanding we do have, particularly if I compare Ozco as well, we see Ozco as a partner, and Ozco, whilst they're represented as a peer comparison, in that they are a partner of ours when we looked into the deal mentioned before by Ramsay in New Zealand with St. John. But we do believe we have a broader offering. We do believe we have more data that can be brought in to make better insights for our AI ingested information. So that's where we believe competitive advantage. But obviously in the fundamentals as well, the peer comparison was also about the company. We have a 33 times larger recurring revenue. We don't have debt, so we wanted to make sure that you could see us generally against a bigger player and a smaller player, just to put us in the market.
And another question that's come through on the presentation, actually. Home care gets a mention in the presentation and the quarterly, but every contract win disclosed this year has been facility-based. How much of your revenue is actually coming from home care today, and when does it become a real revenue line rather than a strategic option?
Yeah, I've been asked a little bit this a few times by analysts going around, and we'll need to do some more work because of how you define home care versus retirement living versus aged care that can be very, very blended. So I don't want to mislead the market where we are right now. Invariably, the larger deals such as retirement living and aged care will dominate our announcements due to their size. But that's not to say home care isn't growing, particularly through our resellers. We do have effectively large, which will be announced, and small, which is going to continue to evolve the aged care offering in home care. And as we've said, we believe, and Graham, I think well before my time talked about this, that we do believe home care time is coming, but everyone's waiting for that clear moment. So we're focused in getting the big deals in residential aged care and deploying really, really well. We want to be really clear. We believe long term, you're going to have to stay in your home, and sensors and data are going to be incredibly important for those people and for their loved ones. And we're going to play a really important role in that.
Pat, this next question is for you as well. You grew MSL Solutions from a $16 million to a $120 million market cap before a private equity exit, but that was a software business serving golf clubs and leisure venues. Quite different from what Talius does. What specifically from that playbook applies here?
The way I look at it, there's some nice cafes and things in some of the retirement living places, but no, look, it is software and hardware in a venue, and they're very similar. In MSL, it was Suncorp Stadium and some of the major stadiums around the world, putting in lots and lots of hardware and making sure your software was tailored to that market. In very similar way, residential aged care, very complex, large sites, indoor, outdoor. So it is very, very similar in this regard in terms of hardware, software into a venue site, and making sure the end user, either patron going to a game or a patient being able to access their data and being able to make it user-friendly. There are a lot of similarities. Obviously, sector is different. The care requirement is different. Being up at the most important times, the requirements are different, but there are a lot of similarities as well.
And just a couple more questions have come through, which I think we have time for. The next one is, the $5.6 billion in federal funding flows to operators, not technology vendors. What's the actual mechanism that converts that funding into a Talius purchase decision?
Look, I think there is always going to be a lag of time between the money coming through government and being utilised by the end user. But as I've tried to point out, and maybe I didn't get my message well enough at the start of the presentation, we do believe that technology is the only solution to this crisis here at the moment. They are running out of room. And for those on the call that have been into an aged care facility, there is no space left, and it's going to get worse. And the workforce is constrained. And as a consequence, we do believe technology is the solution. And this is where our competitors making announcements or ourselves making announcements, we do believe this is coming, and the deals are getting larger, and the people wanting to support software with these sites is incredibly important. This will take time. And because it invariably, when you get government money, often is usually accounted for, you have to account for it in certain areas, but there is part of the aged care announcement back in November, which had some funds for technology. And we want to make sure we play a part in that role.
And just the last question we probably have time for. Looking ahead, what are the 2 or 3 things investors should be watching for over the next 6 months that would tell them that the re-rating thesis is actually playing out?
Yes, so a couple of things that I would be looking for. Appendix 4C, we're very focused on our cash, and they're going to be coming out very regularly. We are a responsible user of cash, and we do believe the second half of FY26 is going to be a very, very positive one. Graham's led. We've talked about the sales pipeline and delivery of that sales pipeline and the contract process. We believe we made some really good advancements there. So Appendix 4C is one thing for investors to look out for, and then obviously significant announcements. If we make an announcement, there is a lag for those big deals to be implemented and for the project milestones to be delivered. But it's a really forward-looking statement when you see some of those big deals announced.
Thank you, Pat. And just before we move on to the demo of the health module, Ramsay, Pat, are there any final comments you'd like to leave investors with today?
I think what's been said is pretty clear that the thematic is real. The crisis is upon us. I think Talius is structurally prepared for this. The funding is starting to flow. Capacity and workforce are strained. Technology is where this all needs to go. Having been at this for a while, we've certainly done the heavy lift and the hard work to get the platform to where it needs to be. And some of the recent announcements are evidence of that. We look forward to sort of more to come. The discipline around cash flow and frankly, making some adjustments at executive level So we are absolutely prepared and ready to scale. We combine that with the strong pipeline, the contracts are real that are coming through, the recurring revenue is real, and we look forward to really executing on that over the course of the next 6 months and beyond, and really look forward to keeping shareholders updated on that.
Thanks, Ramsay. I'll now hand over to Graham Russell to provide the demo of the health module. Over to you, Graham.
Thanks, Gillian. Thanks, Ramsay and Pat. I think just reiterating to what Pat mentioned there is that the key part for boards and directors and executives is really around this governance and compliance piece. What Talius is doing is automating this data sources, and so which has been manually collected now by staff on a manual process. And as we said, that workforce shortage. So we, as Ramsay mentioned, is that we're device agnostic, and what we're focusing on is actually those data sets. As those data sets pass through the transformation layer and come into the dashboard, which I'm going to now. This is the Talius One portal, where we actually access a number of the modules inside the software, from tracking for indoor and outdoor, connect. And so I'm going to present the health dashboard today. So as you click through this, you then come into the full screen. The big part is that in the facility is that you've got like anywhere from 40 to 130 residents. And at a snapshot, it's very difficult to actually view all of this information. So in this visualization, we can actually see residents asleep, breathing and alive. This allows some operational efficiencies at night time. You'll see the ones in green is that our AI has actually analysed that these residents are all okay. The ones in yellow need investigation, and the ones in red need to be looked at. We have anonymised these details, but to give you some clarity, we can jump into Ruth and have a look at her day story. From here is that we've actually collected all of the key data information, none of it manually. So all through information that's shared here. What we wanted to do is show you how that data is presented and how that AI is actually presenting that information. We've got weekly here, and we can actually see the sleep, toilet, and nurse call events and alerts. And on the daily basis is that we can see the AI has actually created an alert information up here. The nutritional intake has decreased with notable weight loss trend. Sleep quality deteriorating with frequent nighttime waking, and dietary and sleep hygiene review recommended. Most people with AI would like to know how that data has been validated and the information that's been displayed. And we can see here in this recent alerts is the Talius platform has reviewed all of the sensor data, and those sensor data is concentrating on nurse call, sleep, falls, hygiene, dementia, meals, and also we'll also review the care notes. So we actually look at the notes that have been taken by the staff, and we can see here the refused evening meal 2 consecutive days, lunch intake reduced approximately 25%, fluid intake below target. Sleep quality deteriorating, they wake up 4 or 5 times a night, and weight loss detected. Weight has declined from 72 to 6.94. Hopefully that gives you a bit of insight how from this huge data set that we can actually then review all that information and provide the key information for those care teams. This then gives, I suppose, shows the commission that you've got complete oversight, which then can flow through all levels. From that feedback from there, we actually then look across all the facilities, retirement villages and home care through the single portal. And from that single portal is that you can then look after one site and also expand across to 80, 100,000 sites, and breaking it down as a sort of federated data level. Hopefully that's helpful, Gillian, and if there's any questions after that, please, happy to answer, but that just gives you a quick run through of the health dashboard.
Wonderful. Thank you so much, Graham. Thanks, everybody. That concludes today's webinar. Thank you to all investors who joined. A recording of the webinar will be available on Talius's website in the next coming days. Thank you and have a wonderful day.